Hello and welcome to another presentation by Property Profits Training Group, where we provide real estate investors lots of portfolio building strategies and money-making solutions that work in the real world. My name is Gord Lemon, and I've been investing in Canadian real estate and more recently in the US for over 25 years. I'm also a trainer, author, mortgage broker, and manager of a mortgage investment corporation, which is like a private bank. You know, other than income, credit is the next most important criteria a lender uses to qualify a borrower. Understanding your personal credit can be the difference from being choked by it or using it as leverage to financial freedom. It is therefore necessary for people who are looking to improve their financing options to understand how to make the conscious steps to improve their credit scores. This requires insight as to how the credit bureau works and what criteria affects your overall score. So let's look into that now. What is credit? Well, it's a system to judge credit worthiness, meaning lenders need to know if they lend you a mortgage or a loan, from your history, they will know and be assured that you're going to pay it back on time as per your contractual obligation. Most creditors report all credit activity every month to the bureaus like Equifax and TransUnion, which mortgage brokers use the most. What is included? Credit cards, lines of credit, leases, and loans, as well as sometimes mortgages. Now, in calculating your score, which is called a beacon score or FICO score, there are calculations and there's different weights to certain aspects of it. So 35%, the highest amount, is on your payment history. So how fast are you paying back your loans, credit cards, etc. And if you're late, that's bringing your score down, obviously. And if you've got bankruptcies, late payments, past due accounts, collections, or judgments, well, this is actually bringing your score down even further. 30% is on the amount owed, so your balance in relationship to your limit. If you're really high on your balance, then that's going to bring your score down. 15% is on the type of credit, so do you have MasterCard and Visa, which are carry more weight than department store cards. 10% on the length of history you've had, so actually older cards are better because you've got significant history with that card carrier. And 10% is on new credit, so the number of credit inquiries. Are you going around to different places and getting your credit pulled? Well, every time you get your credit pulled, that's bringing your score down slightly. This is all repairable over time, don't forget. So don't be adverse to getting your credit pulled, but just be careful about it. How do you improve your credit score? Well, order a copy of your credit report from Equifax.ca or TransUnion.ca and review it, because there's typically errors on it that need to be corrected that are actually pulling your score down. Once they're corrected, your score will go up. Pay bills and credit cards on time, even a $20 payment. Keep your balances, as I said before, under 80% of your limit. 50% is better, and of course paying off within 30 days is best. Get rid of cards you absolutely never use. And here's a tip: have a card with a $500 limit for online purchases only. This will negate any fraud should it happen. If you have high credit card debts, pay off the highest debt first, pay the minimum on the lower debts until the highest debt's paid off, and then attack the second highest debt. And phone up your card issuers and ask for a lower rate. When shopping for a mortgage, don't go from bank to bank and get hits, because that's adversely affects your credit score. Go to a mortgage broker instead, because they only pull your credit once, and then go to a number of lenders. And before your mortgage is funded, don't buy expensive items or take on any loans or leases. Now, the banks make the rules, so to get the best rates at A lenders, your credit score needs to be high, 680 or above. Other than that, you're typically going to B lenders or private lenders, and that's more expensive money, or maybe you're not even able to qualify. So if you have any questions or would like a free consultation, please give me a call at this number or email me at gord@gordlemon.com. Thanks for listening, and hope this has helped. So go and improve your credit score, and we will talk to you soon. See you on the next video.